Hey, good morning, guys. Welcome to the Black Financial Channel. That's theblackfinancialchannel.com. My name is Dr. Boyce Watkins. I'm your friendly neighborhood finance professor. And on the Black Financial Channel, we talk about Black wealth and Black economics every single day under the B1 condition. B1 means we are Black first. Black first means we put our community at the top of the priority list. Black first means that we believe in building our children to control the future. Black first means we believe in breaking generational curses. So if you agree with that philosophy, put a B1 in the chat. Let me know what city you're from. Let me jump right into this topic today. I'm reading an article from Business Insider about inflation. And basically what Business Insider is saying that there are a lot of economists who believe that inflation could drop like a brick, that we could hit a deflationary period, which is absolutely insane considering that inflation had gotten out of control with the pandemic, with the US printing money like it was going out of style. I did not agree with that strategy at all. I thought it was insane and ridiculous they were doing that, but that's what they did. And now you have the problem that you have now. However, now you might have the reverse problem. Deflation tends to push us toward recessions. But what's crazy is that we could still avoid a recession. So I'm reading, it says here that the U.S. could see a big drop in inflation without hitting a recession. Bank of America said that would be pretty spectacular for them to be able to pull that off. Strategists pointed to the inverted Treasury yield curve, the bond market's notorious recession gauge. But this time around, the indicator is signaling a hard landing for inflation, but not for the economy. So it says here, inflation could be headed for a big drop and prices could cool significantly without the U.S. having to deal with a recession, according to Bank of America. Strategists point to an inverted 2-year and 10-year Treasury yield curve. The difference between the yields between the 2-year and the 10-year just steepened to a full percentage point last week, marking the steepest inversion in the last 40 years. This time around, though, the indicator is more of a reflective of a hard landing coming for inflation itself rather than the U.S. economy. So typically, the yields between the 10 and the 2-year tend to be positive, where the 10-year yield is higher than the 2-year yield. But when it inverts and it goes down where the 10-year is lower than the 2-year, then that's a big problem. Don't worry about it. It's a predictor of inflation. That's all it is. It's using long-term bond prices to predict what they believe inflation is going to be. Now, I'm going to read this last quote to you, and I'm going to give you a Dr. Boyce interpretation so you can kind of know what to do. And then if you stick around to the end of the video, I'll give you some investment thoughts that may help you. While curve inversion near historic streams has garnered higher recession probabilities from models, we think curve shape is more of a function of expectations for declining inflation than a deterioration in growth, strategists said in a note Thursday. This is Bank of America. A look under the hood suggests that forward real rates do not price elevated recession risk and instead may reflect expectation for softer landing versus consensus. What that basically means is that they're not predicting a recession anymore. There's been a lot of talk about a recession or a pullback toward the end of the year. That's still a strong possibility. Just because one economist says that it's not going to happen doesn't mean it's not going to happen. But I think that's information that's interesting to share. Now, one of the things I'd like for you to allow me to do, if you could, is thank one of our sponsors. Our sponsor for this podcast is Forward Lifestyle Clothing. And Forward Lifestyle Clothing is a Black-owned business that has an amazing clothing line, and they're sponsoring this podcast. And so if you are into Black-owned businesses, you can go to forwardlifestyleclothing.com. That's the number 4. Also, my name is Dr. Boyce Watkins. My new book is called The 10 Commandments of Black Economic Power. I'm going to be in Seattle July 8th doing a 4-hour deep dive training on this book. And so if you want to come in, just go to boycewatkins.com. And also, more importantly, if you'd like to get some stocks that I like, as well as a list of AI stocks and the $5 a day investing plan and some other free resources that will help you and your family become extraordinary investors, just text the word stock to 31996. It's on the screen. Text stock to 31996. So let me go ahead and finish up here with this curve inversion issue. Let's see. They're basically saying here that investors are expecting the Federal Reserve to pull back on interest rates slowly. So the Fed is going to, I think they're going to continue to increase interest rates. That's been what's killing your stocks lately. I think they're going to continue to do that just a little bit more, or at the very least, they're going to pause for a while. But then when they start pulling them down, that's going to give the economy a little boost, like steroids. So effectively, the money you've been making so far this year, 2024 is expected to be an extraordinary year. Extraordinary year. So what I'm asking you to do is to consider investing in the market, because the market is expected to do well. Even if your money doesn't grow, investing is always better than spending your money, because if you spend your money, you know your money's going to be gone. At least with investing, you have a chance that your money's going to go up. Give me a yes in the chat if you understand what I'm saying. So anyway, please hit the thumbs up button, thumbs up, share, subscribe. And I'm going to come back in a little bit later and talk more about this stuff. If you'd like to follow me on Instagram, my Instagram is The Real Boyce Watkins. And also, last but not least, don't forget the All Black National Convention happens October 20th in Atlanta at the Marriott Marquis Hotel. If you'd like to join us for the convention, where we gather the world's leading experts from the Black community to solve problems for our community, I'm going to try to put the URL on the screen so you can have it. It's allblacknationalconvention.com. That's allblacknationalconvention.com. We have experts from everything from therapy to politics, to stock market investing, to real estate investing, wealth builders. We have people that are experts on family, everything that Black people need in order for us to be successful. That's what we have at the convention. But then on top of that, we have a lot of people there that just connect and form investment clubs. So it's really kind of a Black excellence convention. It's more of a B1 sort of experience. So if that's who you are and that's who you want to be and your energy is good, then the convention's for you. So go to allblacknationalconvention.com. Not only can you get a pass, but you can also be a sponsor or a vendor. There's plenty of money that gets made. People are there ready to buy Black. So if you have a Black-owned business, this is a great chance to put your business on the map. So go to allblacknationalconvention.com. If you sponsor something, we will make sure that this platform sees you and that all the people at the convention see you. So God bless you guys. Have a wonderful day. Thank you so much for listening, and I'll see you soon. Take care now. Bye-bye.